For the past couple of months, Trump has been crashing the market through his tariffs. There's certainly a lot of uncertainty, and regular equities are extremely risky right now. In order to safely navigate through these uncertain times in the market, ETFs are a safe bet. In this video, I'm going to be discussing the 3 safest ETFs to invest in. This is part 1, and in part 2, my next video, I'm going to be giving you guys some suggestions on some more higher risk ETFs that could potentially bear a higher return. The 3 ETFs I'm going to be discussing are the Charles Schwab US Dividend Equity ETF, the Vanguard Total Bond Market ETF, and the iShares Core 60/40 Balanced Allocation ETF. So for the Charles Schwab US Dividend Equity ETF, it has a very low expense ratio of 0.06%. I like to see this ratio low. The expense ratio is the amount of money you invested that goes back into operating the fund. So a lower expense ratio, the better. For the Charles Schwab US Dividend Equity ETF, it has a 0.06%, so very low, very good, and a lot of your investment isn't going straight into operating the fund. So the discount to premium to NAV basically just values the ETF. Right now it's at 0.04%, so it's undervalued, meaning its market price is lower than its net asset value, the NAV. So a lower NAV may be better. I don't really focus too much on this ratio, although it is important, and right now all the ETFs that I'm going to be discussing are undervalued right now, so take that how you want it. Now this ETF is primarily focused on its dividend. Right now it has a dividend yield of 4.02%, which is very strong. It is important to note that when the share price goes down, the dividend yield does go up, so that's why it's somewhat high. Last couple of years or last couple of quarters, it's paid a very solid dividend of 0.249 and a very small or low share price of 25.54 currently. So you can invest a lot of money and get a very nice quarterly dividend and passive income through this ETF. It has 66.77 billion assets under management and a fund flow of 13.54. The fund flow basically just measures how much funds are moving in and out of the ETF. It has a management style of passive. There's 2 types, active and passive. Active is a little bit more of an aggressive approach. Passive is a little bit more of a less aggressive approach. It tracks the Dow Jones US Dividend 100. So a less aggressive approach, maybe not bearing higher returns, but certainly giving you a very safe investment vehicle. So it is 99.93% invested in equities. So basically all of the ETF is focused on equities. It is focusing 16.81% of that portfolio to consumer non-durables, 15.08% to health technology, and 14.56% to energy minerals. And they've done a tremendous job at allocating this ETF towards companies that pay out a high dividend. Right now, the dividend amount for March 2025 was 0.249, but we saw a high of 0.275 in January of 2024. I'm currently invested in this ETF. I think right now, with times of uncertainty, finding just something that pays out a good dividend, such as the Charles Schwab US Dividend Equity ETF, is a very safe bet. And when the stock market starts to rebound and the economy starts to rebound in a year or possibly in a couple of months, we will certainly see these businesses start to pay out an even higher dividend, and you will get quite the passive income from this ETF. Now the next one I'm going to look at is the Vanguard Total Bond Market ETF. Now this primarily invests in bonds, primarily government bonds. I'm not too worried about where the share price is going. It more pays out a monthly dividend at a very good rate. It has a low share price of 73.41, so you can certainly get a good monthly dividend check from that. It has a dividend yield of 3.67, so very strong there. A discount to premium to 0.05%, so undervalued, and an expense ratio of 0.03%. So very low expense ratio, lower than what we saw with the Charles Schwab Dividend Equity ETF. So a lot of your investment is not going towards operating the ETF. Now it's important to get a little bit of an understanding on bonds and how they work. Right now they're invested a lot of bonds, but some of the big asset holdings here are the United States Treasury notes, 4.25%. It says a term to maturity of 1 year as a coupon of 4.25%. So that 4.25% is the dividend that is getting paid out on a semi-annual basis. So the higher coupon, the better, and this stays fixed over the duration until the bond is fully matured. Some of the other ones are the United States Treasury 4.375% bond. This has a coupon of 4.38% and term to maturity of 9 years. And the last one I'm going to look at is the United States Treasury Notes 4.5. This has a coupon of 4.50% and term to maturity of 8 years. So for this ETF, I like to see them invest in government bonds, as government bonds are more a safer option for bond investing, as well as them investing in more longer term bonds. You saw the two that I stated that they invest 0.43% and 0.42% of their assets in, and they have a very high coupon rate of, it was around like close to 5%, and that stays fixed through the till the bond is fully matured. So a longer maturity rate and a high coupon rate really gives you the comfortability that they're going to be continuing to pay out a high dividend through a long duration. Now their dividend right now is 0.236%, but unlike what we saw with the Charles Schwab U.S. Dividend Equity ETF, this pays out their dividend monthly. And their dividend is coming from their coupon from their government bonds. Now they do invest some in corporate bonds, but nothing too risky or high risk. And they have 1.25% of their assets in the US dollar right now, as a lot of ETFs do, just due to the current risk in the market. So overall, I've stated this in other videos, but really getting a diversified investment portfolio is very important. Investing in the Vanguard Total Bond Market ETF is a great option. Pays out a monthly dividend, which is great. A lot of their government bonds that they're invested in are long-term with high coupon rates, so you're going to be guaranteed a good dividend for a long duration of time. Now my last one is the iShares Core 60/40 Balanced Allocation ETF under ticker AOR. Right now it has a current share price of 57.22. The last 5 years, it's had tremendous growth of 30.37%. Now, this ETF focuses 60% of its portfolio towards equities and 40% of its portfolio towards bonds. Now, this may not be the highest performing ETF, but it certainly is the safest bet, as they have quite a diversified portfolio, 60% equities, 40% bonds. So you're definitely guaranteed some type of return no matter what's happening with the current market. It's a discount to premium to NAV of 0.06%, so undervalued there. Its dividend yield is 2.69%, and it has an expense ratio of 0.15%, the highest one we've seen today, but nothing too crazy. I've seen them go all the way up to 10%, so anything low is very good. It does have a passive management style, and it tracks the S&P Target Risk Growth Index. Nothing high risk. They're passive, and they're not active with their management style. Now this one is a little bit different. So its holdings, they actually hold their other ETFs. So we can see that 34.49% of their holdings is under the iShares Core Total US Bond Market ETF. And 32.78% is under its iShares Core S&P 500 ETF. So that tracks the S&P 500 and tries to do its best job of replicating that growth. Right now, the S&P 500 is down, but over 5 years, over 10 years, you will see that start to rise. Now, it's quite volatile with its dividend. December 2024, it paid out 0.608. April 2025, it only paid out 2.48. So, dividend's a little bit spotty there, but certainly this is the most safest ETF, and it will give you a very solid, maybe slow return, nothing too quick, but you're certainly going to make money off of this ETF. Now, its top holding right now in the iShares Core Total USD Bond Market ETF, its first holding is in the US fixed bond of 4.25%. This has a coupon of 4.25% and term to maturity of 9 years. Like I stated with the BND, the Vanguard Total Bond Market ETF, We're looking for long-term to maturity in a high coupon rate, really allowing you to be able to safely know that they're going to be paying out a good dividend through that 4.25% over the 9 years till the bonds fully mature. Now I'll only look at one more, but 0.47% of their weighted portfolio for the total USD bond market ETF is towards this United States Treasury notes, 4.375%. Now this also has a term to maturity of 9 years and a coupon of 4.38%. Overall, right now they're kind of allocating more of their assets towards those bonds, or their iShares Core Total USD Bond Market ETF, as the market is quite uncertain right now and really in a bear market sell-off. Maybe some regrowth we're seeing, but overall, super solid stock. You know you're going to get a good dividend through the bonds, maybe through some of the equities they hold through the S&P 500 ETF that they have, and you will certainly have some good growth depending where the market is, because they do primarily track the S&P 500. Right now it's down, but with the bonds, when the market's going down, you're going to have a good dividend, a good payment that you can rely on. When the market's going up, the S&P 500 will give you a good return. So those are the 3 ETFs that I recommend beginners or just anyone invest in. Super safe options. You certainly will get a return, and they've bared a return through very, very hard times that markets have seen in the past. Right now, we are facing hard times, so ETFs are a good way. Certainly bond ETFs, just really diversifying your portfolio, investing in equities and bonds are a safe option, and these are some ETFs that do that thing. So thank you guys so much for watching. I hope you guys enjoyed. If you have any questions or comments, please leave them down below.